Broadcast. Welcome to another episode of the Zaner MarketCast, your one-stop for all of the agricultural market news that we have in front of us. My name is Joe Nikruto, and I'm here today
I'm
with
Dan Hussey, everybody.
Dan Hussey. What do you say?
How's it going, Joe? How's your week been?
Going great. Just another week filled with mechanical challenges. I'm driving into the city yesterday for an event, and the vehicle begins to rapidly overheat. And I had one thing to do yesterday, and that was put coolant into the vehicle, and didn't do it. Of course, this vehicle has many hundreds of thousands of miles on it. I'm very happy with that, but I was unhappy to be stuck, and not stuck, but to be barely moving through horrible traffic on the Dan Ryan and watching my temperature gauge begin to rally. It was moving from the lower right to the upper left, kind of a reverse rally. But man, it was just brutal and probably took a couple minutes off of my life due to the adrenaline spike. So then I get off the highway and onto the surface streets of the city of Chicago. And then I go from stop sign to stop light to traffic jam for another 20 minutes trying to get where I'm going. And ultimately made it without burning up the engine too bad. But
Jeez.
just a harrowing experience for me, because I'm thinking, okay, what happens if I overheat this engine and this thing just blows up, and here I am in the city of Chicago, stuck in the middle of the street. You got to sit here and wait for however long for a tow truck to come and get me and then drag me 60 miles back to where my driveway is, or where I can throw it in the backyard and let it sit there for another 15 years. But luckily, Dan, that adventure resolved with no overheating. And today I spent a little bit of time.
And lucky it was this time of year too. I mean, if it was any hotter outside, right? You may not have made that trip.
Could have been a lot worse. Yep. And it's been
10,
the cool
20
temperatures.
Degrees hotter out, man.
Cool temperatures that have just lulled me into, and I had one job yesterday, and that was put coolant in that thing. And so today, put a little coolant in it, took some of the air out, and maybe it's going to be okay. Got my fingers crossed for another couple 100,000 miles on that. What do you think?
Ooh, wow, that's a big offer. Another 100,000 miles on that car.
Right.
I mean, you've got 100 grand on it already.
377,000 miles.
Yeah, I don't know about another 100 on that one, man. I don't think I'm going to take that. I'm not going to insure that bet.
Might have just been lucky to get home. Dan, before we get started today, we want to remind everybody if they would like to get a daily update on this price action, and specifically how to put this price action to work for them, they need to sign up to the Zaner Ag Hedge daily update, right? There's no cost, there's no obligation. Ted Seifert, expert analyst Ted Seifert, comes on every day about 2 p.m. And updates us all what he saw today, what we might want to think about for tomorrow. Got to be the best deal in all of the ag hedge land, wouldn't you say?
Yeah, I mean, the price is right. I'd say free is always the best price to be paid, and that is what we are offering, to you and to anyone who wants to call in, check it out, hear from Ted, hear from our team. It's right there. You can get that number in the link and comment section of this broadcast.
Zaner Ag Hedge Hotline. Sign up today. No cost, no obligation. And Dan, I got to tell you, as I felt like this week was kind of quiet, but there was some technical action that really threw me for a loop this week. That move in beans earlier in the week that made it look like beans would never be good again. That really kind of caught me by surprise. And I thought to myself, okay, so we're making new highs. Who is going to sell beans as we're about to break out and make new highs? But lo and behold, pretty big volume in the July beans. And I was thinking to myself, so what do we think about this chart now that we have come all the way down to test what I think was that downward sloping or trying to stabilize 50-day moving average, right? And held at 1036.5-ish yesterday. And here we are today trying to make our way almost all the way back up to 1060, whatever, 1058 on the close. And I just don't know what to make of this chart. Am I right to feel that this was a test that the bean market has passed?
You couldn't get it back below that 18-day moving average. You couldn't get it below the 55-day. You couldn't get it below the 100-day. Back above those. Now we're back above that 200-day moving average. A level that we had been below for all but what, a day and a half there back in February. Since last September. These big technical levels that are, if these are constituting or some kind of reversal for you, if they didn't define the trend, the downtrend before, then how are they not defining, the reversal of that trend now as we go above them, right? So, who they are is, I guess, what I'm getting at. Maybe, had gotten a little overbought there into the start of April because we kind of really snapped back with a bit of a V-shaped recovery there in the end of and after the end of March and into the start of April. But back above these levels really have reestablished some strength in the soybean complex and in the beans in general.
Open the week. I was just looking at open interest there. Open the week in July beans 10.58.5. The high was 10.64. Low 10.36 3/4. Last trade 10.58. Only down 1 1/4 on the week. Open interest continues to increase, I think, in July beans, even though we had some rather dramatic changes in open interest earlier in the week. On a weekly chart, soybeans appears to be chugging along. I mean, that looks like...
I had a weekly up there just because, hey, we were kind of talking about, we were given the weekly levels, and I was thinking to myself, where are we, over the relatively speaking, over the last couple of weeks, because we've been kind of sideways. And this is an 18-week moving average, and like we're not flagging above that. I mean, it's a little bit of an arbitrary level, I suppose. It just happens to be on the chart when we flip it to a weekly. But like, what's not arbitrary is price having gone down, right? What looked like a breakdown back below 10, a gotcha kind of snap back here, this outside week higher, and now like the market effectively trying to hold up or build into a series of higher highs and higher lows over the weekly charts. That's not this. You don't love seeing this week kind of be this doji like structure being down. What did you say? Maybe a penny on the week?
Yeah, 1 1/4.
But man, you get through these highs, okay. You hold this support, you get through these highs. I mean, what's changed? Nothing. It's just the market kind of bull flagging on a little bit of a weekly pennant structure.
Funds long, 32,000 contracts coming into the day. That was an estimate. And I can't remember where we were last week in terms of fund length, but if the funds are back on the bid, so that sell-off, the funds a little disappointed in the lack of progress in trade talks. You got great weather coming, but which certainly emboldened the bear camp, right? You can see everybody's favorite analyst mentioning the bear camp and 2 big down days as they just fell through all of the spaghetti. And then next thing you know, here we are on
right
Thursday
back
and
up,
Friday,
aren't we?
Right back up. So if you're really bearish and you got heavily committed here in the last 4 days, you're already underwater.
Right.
And you've been underwater for some time. And so not that makes that big of a deal. This downtrend has been pronounced, and we are only a handful of days above some of these longer term moving averages. I wouldn't want to, I still feel that price action from last week was a breakout.
It's still good to see price action stay above them, right? That's what you need to see if you want to hold on to the idea that an uptrend could be, still be intact or like resuming or whatever, right? Like the bare minimum, that's what we need to see at this point.
So if we take out these highs that we put in last week that were a breakout on the chart, if we break out of the breakout, I can't imagine where we're headed from there. And I think you and I might have did a quick measurement last week. I mean, the next stop is kind of like 11 and change, right? 11.10. There's some previous highs there at 10.80 ish, and then 11.20 maybe. I mean, you really could be excused for getting bulled up if we get out over these previous highs from last week.
I don't disagree at all, right? I think this is a market that is saying like we push down. Nope. We pushed down again into that the end of the year. We capitulated, right? I said, nope. When we came back down again, they're like, well, maybe, China, China, right? Nope, right? And we're right back up. I mean, every time we've come back up, we have not, there's really been no stopping the market until $11, right? Like, look, the last few times, okay, one little time here and one little time here, but I'm talking about like the bigger, weekly swings here, monthly swings. Well, the next swing is all the way back up to 11. And if it gives way this time, this is a big resistance zone. Let's look at the daily continuous chart for soybeans, July soybeans here, and take a look at, when we look at this 1058 area into $11, when we look at that continuation chart, um, I mean, you can see how back above 11, where has soybeans been? Like, there's kind of a long way back up, right? We maybe shouldn't really stop until 12 to 13 again, right? I'm not calling necessarily for a rally to 12 to 13 just yet, but the narrative of how we get there begins with a breakout above 1060, getting back to 11, right?
And the larger
Uh,
context that this bean market is operating within, tremendous political uncertainty.
Absolutely,
Uh,
right? China.
maybe China ain't the biggest soybean crop. And I mean, and not to be, and I'm kind of joking, right? Biggest crop in the history of crops, but it might actually
Sure,
be the biggest, right? I mean, it was a rather
it
large
could.
bean crop, right?
It
And
could, right?
so, uh, but yet you look at the
Planters
bean
aren't
market.
done yet.
Exactly. You look at the bean market now, and with all of that, with all of those headwinds, the word resilience seems to come to mind, and you think, okay, under all of these bearish factors, the bean market is still managing to hang in. And I don't know if that's a function of 84 million acres or a function of the U.S. just all of a sudden getting good at moving those beans to destinations, or the idea that there's some sort of Chinese deal. And a lot of discussion about whether that deal can come quickly or not. Certainly, that debate should be ongoing. Today, the talk was that the Chinese may be ready to have some discussions and
Mhm.
a debate about whether we had contacted them or they had contacted us, which has been kind of a hallmark of this potential agreement. Is that nobody really, I hate to say childish, but it seems to be very minor items here that are up for debate between us and the Chinese. Where did you call us? Did we call you? Are we going to talk about this? Are we going to talk about that? Feels to me like the impetus is on both sides to come to an agreement here pretty quick, if that's even possible.
Feels a lot like saber rattling. Feels a lot like grandiose, stage setting on a, on an international geopolitical level. Um, I think that there's a way out of this where China's going to try to save face. I think the Trump administration may give them that. I think that's all the concessions that we're going to be looking for, because nothing really changes, right? China needs our demand for their goods, and we need their demand for our commodities. They're the we're the CPI, they're the PPI. We also happen to produce we also happen to produce those commodities they need to be a producer. But the idea that we can't exist without each other is kind of silly. Our economies have grown, in the Chinese economy over the last 30 years. The dragon, so to speak, has been or is it the tiger? I forget. Either way, it's been funded by U.S. demand for Chinese goods and services, right? And services through different labor sectors as well. So um, I think there's going to be a very quick resolution to this. These two parties, Xi and Trump and their administrations, got to resolutions in the first administration. It was a lot slower back then because that was their first time dealing with each other. This time, I think they're just playing and setting the stage a little bit. I don't know, they're play casting politics right now more than I think that, you know, uh, than anything else. Wouldn't you say that there's more here about trying to be shows of strength than actual disagreements, right? Like,
And
would
it
you say that there's right, like you were saying childish before, but it's like it's political grandstanding. I don't know how else to describe it, right? Like,
kind of the energy, it's funny, we want to be careful about the words we use here as this goes out onto the internet, right? But the energy feels small. And I wonder, so you're two of the biggest superpowers globally, and we're gonna and it's gonna
petty,
be he said, she
even,
said, yeah, and it's gonna be, oh well, you called me, I
petty,
called you.
even, yeah,
Come on, man. It's time for these guys to roll up their sleeves and
absolutely.
consider, You know what I mean? Consider that there are larger issues here, and
And
maybe get down to business.
let's put a bigger perspective on everything, folks, right? Like, okay, let's just imagine for a second that America and China don't get along for the next year or so. Yeah, things could get bad. There could be recessions, blah, 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 blah. Now imagine that what we saw, the turbulence in markets, indices, energy markets, agriculture. What if this is the worst it's going to get? What if this is the bears threw everything they could at knocking the optimism out of this market, and this is as bad as it could get? Think about that for a second,
Yeah,
right?
that's what I'm talking about. The bean market
Holy
specifically
cow.
showing tremendous
Paddles
resilience.
at all-time highs. Like all of these other things just don't make sense with what's going on in other places. And it's like, okay, hold on. If there's a real issue or problem, or we're seeing a huge issue here with demand for row crops and stuff, why the heck would beef and cattle prices be through the roof, right? Like that demand should fall apart as well, right? So it just doesn't, something doesn't add up. There's too much resilience and strength, it feels like, out in the market and in the economy, and markets are having a hard time being held down at this point, it feels like.
Even wheat. So I'm looking at a July wheat chart. Funds are still short coming into the day, maybe 93,000 contracts of wheat. And I'll be darned, that's up 12 on the day. I
Yeah.
hate to even look at a weekly.
And pull a weekly up pretty
I hate
quick
to look
here.
at, there it is. And that weekly
Wow.
chart says you open the week at what?
High low open
Uh,
there of the week on the left there for you.
I got you right here. Opened the week at 530 and three quarters. The high was 546 and three quarters. Low was 530 and a half. Closed the week at 543, near the highs, up 12 for the week in wheat. Now, when was the last time we said that? It's been all the way back to the 11th of this month, right? So it's been 2 weeks since we've had that sell off to new lows, and then maybe wheat is trying to carve something out here. I got a feeling I might have said that the last time we were up 12 prior to this
This
move
is
lower,
one of
but
the more impressive green candle days we've seen in a while. Like the last time we saw these, back in January, a day like this, it saw follow through. These bigger green candle days after a down spot of red have seen follow through every time since last September. So I don't think you're wrong in saying that, Joe.
maybe I was wrong in looking at the daily chart for, yep, sure was. Let's update that.
You gave the right numbers for wheat.
I think it was for just, that was just for the day, right?
No, that
On
was
the
for the
week,
week.
opened at
Oh, maybe.
544. The high was 546 and three quarters. Low was 523 and a quarter. Closed it
Yep.
at 543, two and a
Yep.
half off the highs. Changed for the week down to, but the weekly chart is almost even more interesting, right, than the daily close here today, because you
And
went all the
didn't
way down to
we
520 and bounced.
And we must have talked about this last week. Like this is that divergence that you look for a bottom to form. I don't know. Maybe I was talking about with somebody else, but you have this
What are
trend
you
line
doing?
against the
Another
lows,
agricultural podcast every week,
right?
Dan, that
Oh
I don't
yeah,
know
I'm
about?
cheating on you, Joe.
Are you seeing another? Are you seeing another technician every week? Good for you. You guys got to diversify a little bit in this day and age. Anyway, so that July, trying to put something together here, it's very difficult to forget about today's price action when you look at a weekly chart in wheat and this major downtrend that we have been in for so long. Seems to me fundamentally that maybe there could be a turn here at some point. But my goodness, 520.
But I will say this. I think we have now touched on diminishing volume down into a contract low, into the supportive trend line with divergence in the RSI. We're now back out of oversold conditions and straight back up towards that 18-day moving average. You take back out that 18-day moving average, maybe give it a day or two of chopping around. I think it's straight back up to the 155-day, then the 200-day, right? I think it's back up inside of this kind of like downward sloping, choppy price action. But I believe we have passed from a period of price discovery lower that really has just lost momentum and couldn't find, really break down, to now a period of price discovery higher. And that's my prediction for into the next week, is that I think we're going to see a green close between this Friday and next Friday.
If this wasn't wheat, right? Uh, what level would you say here? I mean, there's got to be a technical level that inspires these funds to cover.
Oh, I would say, I mean, that 18 day is a good place to start because that gets you back into the majority of this range. And then the really big level is going to be this 570 area, this old high. And then, of course, like if we're going to talk, flip the scripts and you get the funds maybe flipping long, that's probably happening up around that $6 mark, maybe the 200 day, or even this, back above this 640 high, really break this. I mean, now you got to talk daily downtrend, right? How do you convince a fund to not still be a seller in this downtrend is the $1 million is the question Joe's effectively asking. And you got to start taking out the levels that have held as resistance on the way down for major starters. And $6 seems like a massive level that needs to get taken out if we're going to see the real reversal, I think, in that mindset. But in the very short term, um, flipping an inside day to outside day is a good start. I think that's why we saw some covering today. Now back above that 18 day is the next one, which is right around that 550 area for Chicago wheat.
Corn, kind of a tale of two cities here on the
Sure,
weekly price action.
And for the old crop, new crop, right? With old crop being down 3/4 and new crop being up.
On the week, July corn opened at 483 3/4. High was 485 3/4. Low 468 1/4. Last trade 469. Right on the lows. Down 16.5 on the week. Early in the week, ideas that forecast had changed. You've got decent precipitation. You've taken almost all the drought out of the eastern Corn Belt. You've got rains in the west of the Corn Belt. You got rain central Corn Belt, subsoil moisture. A lot of places seem to be sitting pretty. Safrinha corn crop, another example of timely rains down there. That Safrinha corn crop could be getting bigger. The corn under pressure for almost the entire week.
Yeah, and it's probably going to remain that way, but I also think that there's some value down right into supportive levels that we've seen. Obviously, there's been very clear reasons why we couldn't crack the $4 handle before. It is worrisome because you look at this chart with that trend line I just put on it. This balance doesn't look that great, on this daily chart. You break this 470 to 460 upward sloping trend line, basically where that 200-day moving average is. That's the narrative of how you start to think about corn to $4. And I think you're also going to want to see a really timely planting. You're going to see, just good weather, right? You're going to want to see that narrative continue. And if there aren't any hiccups, there's no reason to can't build in any kind of premium into a market. You're going to get this kind of this listings price action that could threaten breaking support. I was really optimistic that old crop corn was going to kind of break out of its spaghetti of moving averages here that it has been holding for the last week up around that 5,500 day and 18-day moving average, the 479 to 480 area, and it just didn't. Right, we did the opposite. We just settled down around lows. If anything, it looks like we're trying to break lower and back down to that upward sloping trend line on the daily chart and that 200-day moving average. We're now into oversold territory in the RSI, but remember, folks, markets can stay oversold in a technical indicator longer than your long position can remain liquid.
Funds are long 100,000 contracts. They add some, they subtract some. Seems like every day here. Been in and around that 100,000. Fundamentally, maybe not a whole lot of corn out there still. End users having to bid up, offer accommodation to get busy farmers to bring corn in or let them have it when they bring trucks to the farm. It seems like people are on the verge of getting some great deals here in terms of basis or other accommodations from the end user.
And I think you just hit the nail on the head where if there's good basis out there still, how far down can this really go?
But it doesn't really look, when you look at this chart, chart and it says that this corn market isn't super concerned about how much old crop corn is currently available. But it seems to me that you're going to go quite some time with because you don't get any Safrinha corn, nor do you get any U.S. corn for how many months? And it looks to me like there's some sort of breakdown here. They used a lot of volume a lot of volume to protect what I think is what was that, the 18-day, the 10-day, 485, 484 and a half, and drove it off. So protected the $5 level last week, got to $5. This thing looks like it's about to take off. Maybe that's a breakout. Holds $5, falls apart. Let me rephrase that. Holds $5, erodes to
Yeah,
the $5
rallies
level,
up to 5, can't do it. There's decent volume that you should see it push through it. It can't do it.
gathers itself for a pushback to 5, and all of a sudden on a weather report, we trade 315,000 contracts on Tuesday. That was a pretty big dip, and really painted that chart very well. And now we say, oh, try to get over
Yeah.
$5, couldn't do it. Oh, try to stay over these moving averages, couldn't do it. Path of least resistance must be lower. And to me,
Yep.
that conflicts
Yeah,
with what I think I know about the fundamentals, right?
Right. In a period of price discovery lower, it finds support, it finds where that bid's at, and then, it can then enter a period of price discovery higher. Not saying it
Is
is
that what
going
we're
lower. I'm
doing?
just saying,
Is that what
yeah,
we're doing? We're looking for we're trying to
how else do
find a
you, how
value
else do you,
area.
yeah, how else do you describe it? At least in the short term, right? How else do you describe it? Because if it doesn't align with the fundamentals and the rest of the technicals, I mean, heck, you look at new crop corn. New crop corn looks good. It's almost like new crop corn already did that same move. You know what I mean? Like draw a trend line here. It's almost like it already came down, tested that, and is now bouncing. So I wonder,
New
I
crop leading the
wonder.
old crop.
Yeah,
Not the
at
way that
least,
you would not the way that you would
no,
anticipate this to play out.
excuse me. No, not on especially not. Um, I can't believe I didn't have that up, but we're going to look at it quickly here together, folks, because this is a quick, fun um, chart to look at. And on a day like today, where it got bear spread by 3 cents. This is the daily chart of old crop, new crop, or July East corn for 2025. You can see we're trading, with a carry here back in, uh, gosh, was that August? So, August of 24. We then took that carry out of the market, and the market went pretty inverted corn come into the new year. And I think we all knew that, right? We all saw that rally into the new year. That corn had, we went 40 cents over in the old crop, new crop. Then we came all the way back to test even money. I mean, just wiped that 40 cents, built carry back into the market. And we were right in the middle of kind of that range. But I point this out because, boy, like, I don't get technical with spreads often, but like, tell me this thing isn't consolidating and like getting ready like for an energetic move one way or the other. I
Yeah,
think
for
we're
sure.
about to see a trend, right? And are we going to be building carry for the rest of the crop season, which kind of makes sense to break down and build that carry like we did today, where that new crop might actually end up leading? Or, are we going to go inverted? Is there a reason to fear, right, future supply concerns and need that old crop corn now, and break out of this triangle higher? There's going to be, a spread like this, there's definitely enough people that actually speculate on the spread that it'll probably, kind of whipsaw around that 30 cents over level and 15 cents over area. But man, oh man, we start to go below 15 cents over. I mean, even after today's price action, just an outside day kind of lower, these bearish engulfing candles that are happening. Somebody cares about this and is starting to bear spread the heck out of it. And if that becomes a thing, you can make a case in a good year with good planting, good production, good weather that this should build some carry. And just real quickly, let's look at the spreads. July corn, you have beans up there. Let's get corn. July D's corn, $1.30 under is full carry. So 80% of that's just called a dollar under. I mean, we're talking that spread moving right from 17 cents over to 80 cents under in a really good production year. So I don't know. There's an opportunity here for corn to build some carry into the market for this to be bear spread. But I also can tell how this looks like a bunch of horse races or a bunch of racing horses getting into the stalls, getting ready to run. It's going to go one way or the other.
That's very interesting.
Yeah.
Let's shift gears.
little extra something for everybody there in what
Right.
we're seeing with July no corn or
What about cattle?
July D's. Excuse me.
Speaking of uh, speaking of off to the races, what about cattle? June 211.10, another week, third, fourth week in a row, third week in a row of that type of
Just
upside
what a
and
move,
out
huh?
price action. Opened the week at 208.60 in the June live cattle high was 211.92 and a half. Low was 208. Closed the week at 211.10, up 285. Another big up week up here in rarefied air. And now that we're here, 211 doesn't really seem like far enough, does it?
No, I mean this is going like parabolic, like cocoa, like coffee. I mean, are we I mean, is this about to do like the like limit up, limit up, limit up, limit, like what would you expect if this was any other chart, right? If no one said this was cattle and you showed me this chart or I gotta turn off annotations. The first time using that was fun. If nobody told you what this chart was before, you go to a daily chart now, um, you'd almost, oh great, I can't get rid of that. But you'd almost think that this was, coffee or cocoa or sugar, one of those kind of interesting or one of those softs that, generally speaking, doesn't uh, doesn't move. It moves rather liquidly.
It's funny that you mentioned that because this trend, if you look back, it has been kind of there've been a few breaks here where it's attempted to pull back for whatever reason, but
I mean,
for the
big ones,
last for
big
the
ones. I
last
mean,
year, since last August, we've kind of been on a ride here, and they just can't hold this thing down. This last
no,
week, I guess we were talking about more challenge with the screw worm pest. That might have something to do with it. This market just continues on 211.10, and you're stretched out, right? I mean, if you're looking at a daily chart, the let's just say the 18, just for sake of argument, am I right? 204 ish, just a little above 204.
yeah. I mean, that's 7 points low, seven
Seven
full
full
handles
points
lower,
away from the 18-day moving
seven
average.
full handles away. Wow.
So I guess what I'm saying is that when it does turn around and drop like a hot rock, nobody should be surprised. But this
No.
price action is indicative of a fundamental situation that I, I'm almost at a loss for words. It's the fundamentals. This
Well,
chart continues to tell you
and that's
price
where the
action.
fundamentals of cattle don't necessarily align with the fundamentals you're seeing elsewhere. If there's this big recession, if we're supposed to be concerned about consumer demand and all these other things, that shouldn't be at all like pushing all-time highs. No, we should be cutting back on red meat consumption. But I also think there's a generational shift. And Joe, I mean, this is a topic that you
You
could
millennials,
write a novel on.
right? You
You could
millennials.
write a
Somebody
novel
told
on
me
this with
the
the
other day.
JFK effect, right? Or the Robert Kennedy effect, I think too.
Yeah, I don't know what kind of credit to assign to him, but it turns out somebody said the other day that
Yeah, make America healthy kind of ideology, or like, or who are some of those other big talk show hosts, oh, what's his, Joe Rogan, others that
oh
have,
yeah, yeah, yeah.
promoted, paleo, sure, but the carnivore diet, and
Well,
that red meat has flipped from this idea that it gives you cancer to no, you should probably just only eat red meat kind of idea.
and I think what's happening, and you may be a fine example of this, not to get too far afield, but all of a sudden you
Sure.
have two children, right? And so much like the pandemic where the chips were down, right? When the chips are down, and for folks who don't know, I'm sure everybody out there that has two kids all of a sudden knows that when you have two kids, the chips are down, right? It's time to you got two
There is
choices.
no,
You can
yes.
sink or swim
Yeah, right.
as a man and or as a husband and wife, or as a man and woman, or as a family and part of swimming, and this is my opinion, and maybe this isn't the right venue for that, but if the chips are down, you have to fuel appropriately. If you want to be the best at home and you want to be the best out in the world, you have to fuel appropriately. And American raised red meat, American beef and to a degree, to a different degree or in a different way, poultry and pork production as well. American protein is really the way to get there, and red
Of
meat
course.
sits, of course, red meat kind of sits at the top of that pyramid, and that might be what you're seeing here. I can't think of any other way. Certainly, the numbers are not there yet. The conundrum that we're in, there is no incentive to retain heifers. We're going to have to figure something out. When you can get X number of thousands of dollars to let them go, there's no sense in developing them. For most folks, I would guess average age of cattle producers well into the 70s. So you can't fault folks for making money when it's there to make, but I wonder how this is going to change. Chart says right today it ain't going to change right away.
Right. And that's the other thing is that honestly, cattle are harder to come by than oil, right? You can't just magically make 1,300 pounds of red meat. Like it doesn't just happen overnight. It happens over the course of, honestly, right, almost years, right?
It takes a little while.
Some extent. Just takes a little while. Not in some extent, it does. And you could literally drill and tap a new oil well quicker than you can get a
animal market ready.
Thank you. Yes,
yep.
Get an animal market ready. But yeah, right. It's so like I understand, and right, we're coming out of a fundamental situation of having lowest herds, smallest herd levels, like in what 50, 60
ever.
years, right? Ever
something, yeah.
Right. So when consumer demand is up and herd levels are down, well, this is what it looks like, folks. Right? I mean, I just think it's that simple.
It's the same thing on the feeder chart. I'm looking at May feeders. I think I'm right to be looking at May feeders yet.
May feeders
we jumped from May to August.
Current front all the way to August, right? It's like
opened the Mays at 292.15. The high was 295.62. The low was 290, almost 291, 290, 97 and a half. Closed the week at 294.95. That was up 442 and a half. And here again, this feeder chart tells you, took out new highs, up into new high territory, shows no sign of turning around. Nobody should be surprised when and if it does, but this chart does not say that's going to happen anytime soon, does it?
No. I mean, it is getting strung out just like your live cattle chart is. I mean, we're getting far away from those moving averages. There's old levels, like old highs we could come back and retest, old resistances, now support. So there's a definite technical reason that, hey, a pullback, could be anticipated, right? I wouldn't
almost 8 handles.
Right. Yeah. I mean, 10 if you're counting down all the way to the 18-day. We're almost 10. We're 9 away right now. You're 14 away from the 55-day. So
as technicians, we demand a pullback to the 18-day. We demand it. We demand a pullback, but we have
on a long enough time frame.
Yeah, right.
It will happen.
We have not seen this market even flirt with the 18-day moving average since it broke out above the 18-day after that pullback. We haven't been anywhere near the 18-day. And that kind of strength speaks to further strength. But frankly, I mean, what we would say is that in a healthy market, you would expect and anticipate and hope for a pullback.
Because that's also exactly what quantifies a bull market. Never quite pulls back as much as you want it to.
Well, good point. Yeah, good point. So
we're all always kind of how they do, right? Yep. Or goes a little bit too far sometimes. But yeah, I mean, you got to look at a continuation chart here to kind of see that box area I put on the chart. But that was just the old summertime highs. We broke out of it. It's the same level in the fats. We broke out of it. We came back, tested it as old resistance, now support. I mean, clear breakout. But a pullback all the way to test this whole area, that 270 area, 260 area on the chart, like it's not out of the question, especially if we're talking about, okay, no, feeder should be heading to 400 or 500 or something crazy. Well, that's could be how it gets there. It probably won't just go straight up. There'll probably be some crazy volatility, but needless to say, we don't need to be talking about that wild of price action when we have this pretty clear uptrend, higher highs and higher lows, overbought conditions in the RSI, dwindling volume, and we'll look for signals like key reversals and other things to help producers that are looking for hedging opportunities or reasons to put the foot down and say, no, I need to get some sales done. Those are some signals you can look for in this type of environment.
And you're starting to see that a little bit in corn, right? My desire to re-own corn with the way that it's
Sure.
dropping, I'm a little concerned about that. But I would still think that with the summer, I mean, there's a lot of weather. We've got really decent subsoil moisture levels in a lot of places, and the seed technology is such that we've seen pretty decent corn crops with not a lot of rain, just some timely rain. But there still is some road to travel here, and it could be that folks need rally insurance. One of the things that I caught something the other night, and I can't remember who I was watching, but they were really harping, Dan, on, we know you're busy, but tell me about your plan. You're getting out in the field. You have spent a lot of money to be able to plant this stuff. Where's your break even? You have spent a lot of money to be able to plant this stuff. Where do you need to put a floor in? Or where are we going to begin to forward sell some of these crops down the road? Tell me what you can quickly about Farmers Ledger and how we might be able to help folks get an accurate count and talk about break evens and talk about building, gathering the data they need to really come up with a plan, to whether they're just speaking with a banker or whether they're actually getting ready to take some action and be prepared for 3 months, 6 months, 9 months down the road. Seems to me like this year might be a real difference maker for folks who were here one moment and then not here the next moment because they simply didn't take the time to gather the data and try to figure out where they were at.
Yeah, and I think that for those that aren't aware, Farmers Ledger is a tool that we have developed over here at Zaner. It actually allows you to track field by field data to track your production, and it creates an entire dashboard to be able to track revenue streams, expenses on a field by field level, your financing and any types of loans and government payments you might get, all to really at the end of the day to generate an actual like enterprise budget and balance sheet that you can take to a banker to be able to, of course, 2025. I haven't filled this out. I wish I would have set this to 2024. I'd kind of filled it out with some info, but create a balance sheet to actually answer those questions of where are these levels, for myself, so that exactly exactly where to be able to check out different profit and loss matrices or anything else, right, for your production. So with that being said, yeah, Farmers Ledger, pretty cool. Check it out. There's some links in the description and the comment section of this video to get involved and to try it out for yourself to see if it's
Dan,
a good
just a
fit.
quick question.
And see if
Just
there's
a
a
quick
tool
question.
that fits for you.
If I'm a farmer and I've got a spare, let's say these days, this part of the year, maybe I've got a spare 20 minutes. Can somebody call us and then we speak with them directly and walk them through? Because to me, that looks like a lot of information going into that. Are we able to walk people through that just person to person to make sure that the right data gets in the right slot and they come up with some information that can actually be usable?
Slow pitching some good questions there, Joe, but absolutely, right? That's what we're here. A lot of this data can actually be automatically imported, whether you already have it in Excel, perhaps you've been doing it another way. And we can certainly be here to help get this going for you and get
down to the field
an account
level.
open and started for you. That's right, down to the field level.
Perfect. Folks, there should be either sign up for that Zaner hotline. I'm sorry, I got lost there for a minute. Sign up for the Zaner
It's Friday,
Ag Hedge
folks.
hotline. Yeah, sign up for the Zaner Ag Hedge hotline, and down where the message is, type in Farmers Ledger. We'll be sure to give you a call, set up a time that works for you. We'll walk you through it, get you a quick look at something that may make all the difference for you this year. We look at the things that we can't We look at the things that we don't really have any hold over, any sway over, like weather, like politics, a lot of things that lead us to believe that maybe there's no action to take and we're just going to float along here. But then when you're presented with something like this or checking in with that hotline every day, there are some things here that we can do to really gather our information and bring it together in a way that allows us to take action and do the right things.
Yeah. And that's where we at Zaner are here to help and support that marketing decision structure that you have to develop for yourself. But, man, what an interesting time to be alive, where every headline, every post on the internet, every little thing said out of somebody's mouth moves markets, and you have to be prepared at every moment, and having a good solid marketing plan is the only way to do that. So what did Carter have for us this week in terms of a question of the week?
I don't have.
Would you rather be too hot or too cold? This is
that a
very
Carter
simple.
Question, did you do that on your own?
This is very simple. This is a Carter question. It came up in the chat here. Very simple. Terrific. I would rather be too cold, because getting warmer is very easy to do. Throwing on blankets, more layers. Warming up when it's cold seems to be easier to do than cooling off when it's hot out. At one point, you can only get so naked, right? Like, you can't take off another layer of clothes to cool off. I'd rather be hungry, too cold.
Dan, and now I'm not. Really appreciate that. Thanks. That's terrific. Not going to spend a whole lot of time here today imagining you taking off another layer.
But anyone else was until you brought it up, Joe.
Making it weird, as Adam would say. I know I would prefer to be too hot as opposed to too cold, as long as I don't have to go anywhere, because there's nothing worse than having to go out to dinner or get to some sort of function and you got that back sweat rocking down the backside of your dress shirt, and it's just like, oh, come on, man. I am not out for, so as long as I don't have anywhere to go, I'll sweat for 6 hours while I'm working. I don't care. Too hot is just fine, but let us step inside the air conditioning when we got to get dressed, I guess.
Joe's mouth to God's ears, everypay.
Yep, exactly.
Don't let the back sweat get you.
Yeah, don't let the
thank you for listening to the Zaner MarketCast today.
If you can't get enough.
Please like and subscribe. You can follow us on Facebook at Zaner Hedge and on Twitter at the Zaner Group and on LinkedIn. If you have any questions you'd like to answer in the show, there's a link to get in touch with us right here in the comments section to get it on the air. Thank you again. Be sure to like, comment, and to follow us to not miss a beat. And we'll be back with you all as price action develops. Take care, everybody. Have a great weekend.
Zaner MarketCast out.